Hello traders, Gary Wagner for Trending Markets, about 10:30 in Honolulu, 4:30 in New York. Tuesday, the 28th day of July, 2015, and this is Trending Markets. We do have some interesting markets kind of unfolding today. As we just mentioned, very, very quiet day in the precious metals, but we do have quite a rally that's going on in the S&Ps as well as the Dow Jones Industrial. The equities complex as a whole, European equities also did well. If you recall from yesterday's show, we took a look at this one particular chart. Now, the chart that we looked at was this chart. It was in Japanese average format, but in Japanese average format, you still get a red candle because it's comparing it to the midpoint of the prior day. However, we talked about the simple fact that what we have seen in this marketplace, in essence, has been a downward sloping channel in which we would genuinely see the market trade to the bottom of the channel, to the top, then to the bottom, but really covering almost the full spectrum of this channel. We talked about the fact yesterday that it once again hit the bottom of this channel, and if I was to be a betting man, which I'm not, I don't believe in hardcore betting. I do believe in speculation when the probability is in your favor, and that's the difference. But I said that I would look for it to kind of bottom here and then kind of track back to the upper end of the channel. Now, we certainly got the beginning of that because when you look at the market, we've got this dramatic rise in the Dow Jones Industrial. And you can absolutely see that in terms of a straight candlestick pattern, what we're looking at is an engulfing bullish. I would look for a continuation on tomorrow's trading activity. And as I said, I would look for it to track back to the upper levels of this channel. But the one thing that we have to realize is even with this in mind, we still have a market that has been tracking lower. In other words, it is a downward cascading channel, not an upward cascading channel. And so for a market that has these record tops here, we've got this double top here at around 18,100. We have our record top above 18,300 right in here. We've not been able to even come close to breaching that. And really, we've gotten lower highs and lower lows in the market. And on a straight technical basis, that doesn't really bear well for the equities going and making new highs. And that's simply on a technical basis, though. So the one thing that we can say is we do expect the market to start tracking higher. Could track as high as about 18,000 back on the Dow. But if it stays within this channel and does not breach these two particular tops, we could expect really some more of the same. In other words, going to the top of this channel and then tracking lower on the day. We talked about the fact that over the last few days we've seen in terms of the currencies, we've identified what we believe is a counter trend, and that was with a stronger euro and weaker dollar. Today, we've got the euro trading lower, slightly lower on the day. As I said, we were up around 110, almost at 111. We're now at about 110.5. As you can see, 110.57, our current print on the day, and we are absolutely tracking lower on the day. However, if we look at our weekly chart, you can see that over these last 2 weeks, there's absolutely no doubt, but this market's been moving higher. However, higher is a relative term because we've got the highs that it reached up at around, call it 111.52, about 100 points from here, and it's come well off of that, this being a weekly chart. When we also look at some of our Western technicals, for example, we do have our MACD potentially crossing, has not crossed yet. In fact, we'll go ahead and blow that up. When you blow that up, you can see it's a lot further than it appeared on that smaller, thinner chart, but it appeared as though it was going to cross, but now it's hooked back up. So we'll absolutely have to see what this market wants to do. Now, at the same time, we do have a little bit of support that's come into the market in terms of the U.S. dollar. U.S. dollar's up, but up ever so slightly, only about 0.18% on the day, 96.67. Looking at our daily chart, the basic pattern that we see right in here is simply called a bullish harami. A bullish harami is in terms of a Western technical pattern, is called an inside trading day. It's a day in which the entire trading range, in the case of a Japanese candlestick, the real body, because you don't really look at the tails on this type of pattern, but the real bodies, meaning the open to close compared to the open to close of the prior candle, when you have a market that's been in a defined downtrend, and we're looking at this particular area here, so we can absolutely say that it has accomplished that. So after you identify a defined downtrend, as we just pointed out right in here, you have a long red candle, and then the following day you get a green candle. Color is absolutely important in this particular pattern, meaning a bullish harami. You have to have had a decline in the market, a long red candle, and then that inside small-bodied harami. Harami simply means pregnant in Japanese. That is simply a bullish harami pattern. Now, a bullish harami pattern in terms of key pivotal reversal patterns is probably about the weakest. You can see a harami pattern right in here. Market's been in a downtrend. You get that inside trading day. Absolutely essential on this particular pattern is that confirming candle. Now, the confirming candle in any bullish pattern is going to be a green candle with a higher high, would look something like this. And for those who have been with me for a while or have studied candlestick patterns, you'll realize that what that bullish harami has now converted into is in essence a three river morning star variation. And the reason I say a variation is because it negates being a star once it's on the inside of the body. For it to be a star, of course, it has to gap below the body, or at least be at the body. And so that's why I would label this a three river morning variation, because you are getting red candle, small-bodied gapped candle towards the bottom end of the range, followed by an upside trading day green candle with a higher high and a higher low. So we'll see what happens in this market, but if we get a strong update tomorrow, we would complete this pattern, and that could signal the potential for a return to the actual primary trend in the dollar, which has been up, rather than this corrective phase that we've been in which we have seen lower pricing. So traders, our only active trade right now is crude oil. We are short crude oil. Crude oil's up. It's up about 30 cents on the day, 34. It's trading at 47.73, up about 0.75%. Now, we did trail our stops up yesterday. When we take a look at this market, again, we've gotten engulfing bullish. We've seen a lot of engulfing bullishes today. But typically, as I said, what I like to do is make sure that we keep our particular stop at least above a 3-day high. Now, we moved our stop yesterday to about 49.75, if I am correct. Yeah, 49.75. When we take a look at the low of 3 days ago now, we're up around 49, 48.97. So my recommendation is to trail your stops down once again, this time trailing them just above 49 to maybe 49.05, and that would lock in a little bit of profits, but certainly protect our equity on this given trade. That means that at worst case scenario, you take a little bit out of the market. But right now, we've got a really pretty solid trade going with over $1 in terms of profits. Contract size on crude oil is 2,000 barrels. So we've got a nice trade under belt. I do believe we will see lower oil prices. I don't think we've got a turnaround, but nonetheless, if we see this market complete this 2-day pattern, meaning tomorrow we get a higher high, higher low, long green candle, that in fact would complete the engulfing bullish confirmation, and that could potentially signal higher pricing ahead. We've had this market trade dramatically lower, as we've seen it trade from about $62 down to this area. So at some point we could absolutely see a bounce. My sense is we probably will not see it here. However, we want to be prudent in our trade, and for that reason I am suggesting that you trail your stops down to 49.05. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.